Many enter the markets believing they must perfectly time the peaks and valleys. They think success means outsmarting charts to predict when stocks will reverse. But the most consistent traders approach the market entirely differently. Instead of guessing tops and bottoms, they look for the dominant direction and simply ride along with it. By the end of this video, you will know exactly how to map a complete trend-following trade, from identifying the right entry point to setting strict exit parameters that protect your capital. To get the most out of this, go ahead and open your preferred charting software. Pull up a major asset, whether that's a Forex pair or a cryptocurrency or a large cap stock, so you can follow along. When you stop trying to predict the future and start reacting to the momentum that is already there, trading stops being an emotional gamble and becomes a systematic, repeatable process. Step 1 is cutting through the noise. Raw price action can look erratic, so we need to apply filters that reveal the actual direction of the market. Add 3 moving averages, the 50, 100, and 200. For a valid uptrend, price must stay above these lines. Next, trace the peaks and valleys. Each new peak and valley must be higher than the last. This upward stepping pattern confirms a strong trend. Compare that to the chart on the right. Here, the price has no clear direction and repeatedly tangles with the moving averages. This is a sideways, choppy market, and it is a condition you need to avoid entirely. Defining the trend is the mandatory first gate of this strategy. If you skip this step, random market noise will chop up your trades. Now that we have found a clear trend, we have to wait for the safest moment to step in. Look closely at how this rising trend behaves. It never moves in a straight line forever. Eventually, the price takes a breath and temporarily drops back down toward the moving averages or a recent support floor. We call this a pullback. A common mistake among new traders is feeling fear of missing out and buying right at the top of a sudden vertical spike. When you buy at that absolute peak, you are entering right before the natural pullback happens, leaving you holding an immediate loss. Watch this magnified area at the bottom of the pullback. We wait for a bullish confirmation, like this strong green candlestick, showing price bouncing upward off support. Once that confirmation candle closes, it becomes your official entry point. By waiting for the pullback, you remove the emotion from the entry. You are letting the market walk directly into a calculated high-probability setup. Step 3 is architecting your risk. This is the mechanism that ensures you survive in the market long-term. Even perfectly mapped trends fail. The market will move against you, which is why absolute capital protection is a non-negotiable rule. This chart shows exactly where your stop loss goes. It is positioned right below the lowest point, the recent swing low of the pullback you just traded. The logic is simple. If the price breaks below that specific line, our upward trend thesis is technically invalid, and the system automatically exits the trade to prevent further damage. Next, we establish the profit target. One method is to look at your chart history and place your target near the next major resistance level overhead. A stricter approach is a 1-to-2 risk-to-reward ratio. A red risk box stretches down from your entry to the stop loss. Adjust the top section so the green profit box is exactly double the size of the red box. Do this before ever clicking buy. When your winning trades yield twice as much as your losing trades, you can be wrong on half of your entries and still slowly grow your capital over time. Look back at the screen you have mapped out. You now have a high-probability, professional trade setup, complete with logical entry points and defined risk parameters. Keep these 4 rules tied to every setup. Trade with the trend, be patient for the pullback, let your winners run, and cut your losses quickly. If you followed along and built your first setup, drop a like, subscribe to the channel, and let us know in the comments. Do you prefer trend trading, swing trading, or scalping? Applying these exact parameters mechanically, trade after trade, is what separates those who treat the market like a casino from those who treat it like a business.